Hi, everyone. Welcome to the custody panel. We're going to talk about custody, stable coins, and maybe some DeFi. Happy to welcome Mike, who I think, interviewed for 10 years at this point. Your company is almost as old as Bitcoin, right?
I guess not quite, but pretty close. So we're about 12 years old now. Yeah.
Yeah. For those not familiar, I sort of think of Bitco as like the OG custody company. Is that about right?
I guess we were the first, and I think we've evolved with the industry. We started out really just doing wallet technology security, which of course stemmed into custody. Today, it's 7 regulated custodians around the planet. I think we probably have more custodial licenses than any other company does. But so look, we grow with it, and then today, a lot of what we do is financial services on top of the custody.
Yeah, I want to get onto those in a second, but just with custody, the business of custody, seeing like Coinbase making, I mean, they've been around for a while, but I'm just curious, like, is it a viable business? Because it just sort of seems like there's a lot of competitors, and the margin must be there must not be much margin left by now.
Oh, look, I don't know. We're a profitable business. We're 450 people strong. We're running in 7 different countries around the planet. I think there's a lot of room to grow. There's so much innovation that happens. I think if you compare and contrast Silicon Valley and Wall Street a little bit here, you'll see a difference. Wall Street's so established, so mature. It's really about how do you take somebody else's clients in order to grow your own client base. And yet, where we're at, you got to remember 90% of our clients don't even know what Bitcoin is yet. So, the future is so much bigger than where we're at right now. One last thing. Look, I mean, come on. Coinbase, their initials CB, central bank initials CB. We got to watch out for that thing.
Okay, I didn't
Any
expect it.
Coinbase fans here? Uh
Yeah.
oh. Okay.
The panel's getting salty. I wasn't expecting this.
There's so
Um,
few people here. We can like sing like Vitalik.
yeah, fair enough. Let's stick with custody just a minute longer. With the massive influx of BlackRock and Fidelity and all this new Bitcoin washing into the system, where are those guys putting it, or how's that different from like the Silicon Valley companies or like the Bitcoin hodlers?
Yeah, like so. Stepping back from like just straight attacking Coinbase for a moment, but let's talk about more centralization and decentralization, and talk about how that interfaces to TradFi markets. So, look, there's been a pent up demand for ETFs for a long time, as evidenced by the fact that these grew from 0 to 20 billion plus in record time. And so the SEC finally launched, was it 8, I think, at the same time?
11,
And
wasn't it?
11. Okay. Uh, all of these guys, their number one issue was how do we get through the SEC, right? And their custodian is an important thing, but they just look for what's the least friction way to get through. And there's only one public company that's a custodian that was like an easy path through. So that's how that happened. Look, we want all the brands. We want BNY Mellon participating. We want BlackRock participating. Fidelity doesn't get enough credit. These guys have been in since 2016, right? So uh, anyway, it's great that these parties are able to participate, and they're going to do what they do best, which is look, they've got large firms, they got a lot of distribution, they will hit kind of the traditional market, no problem. On the rest, for the what we're doing otherwise, look, there's a huge industry out here. It spans everything from Bitcoin, of course, to Ether and DeFi and stable coins and beyond. It's going to take a long time for those things to get adopted into those more traditional firms.
Yeah. One last question on custody. How has the technology evolved? Because as far as I know, BitGo hasn't been robbed, which is good, obviously. But like, are you still like, has your technology evolved, or what's the I know you can't tell me all the details of how you store it, but just give the broad strokes right now of how you protect people's assets and how that has changed, if at all, since you started.
Look, for any company that's involved with security, you're never done with the job. Security is not a feature. It's a thing you just keep doing and you keep raising the bar. So the controls you put in place to secure $10 million is different than what you do for $100 million. It's different from a billion. And we're talking about how do we secure $1 trillion wallets. So here you have to be thinking about nation state actors. You have to be thinking about geographical problems that could happen. There's a lot of redundancies and controls. So yes, the technology is constantly evolving, eliminating single points of failures, more audits, internal audits, deeper controls, et cetera. So it kind of never ends. In terms of state of the art of custody, I mean, it's supposed to be a boring business. If we do our job right, you never really hear about us. What you do hear about us is going to be more, okay, now I've got custody. How do I put those assets to work? How do I do that How do I participate in staking or trading and liquidity, or how do I borrow against it? How do I do uh, settlement across other custodians and exchanges, things like that.
Gotcha. And what are you doing too? Like my understanding is you take your Bitcoin, hand it over to you, pay a fee of like, I don't know, 9 or 10 bips, and is there more to it than that?
Well, to some degree, it's like that. But actually, if you think of the three layers that we have down at the bottom, we run all our own wallet technology. Of course, this is partly rooted in the fact that we've been in the business since before there was wallet technology to buy. We're the only company that does 100% dedication to this 2 out of 3 mechanism, which protects against both theft and loss. We think that if you're going to be a world class custodian, you got to run that technology yourself. There's a lot of people that are outsourcing nodes and things like that. They think it's okay. Look, a hacked node should not cause a custodian to get hacked. So there's a lot of nuance to it. So anyway, the bottom layer is security. The next layer is regulated custody, and then above that's financial services. We've been hearing pretty much since 2015 about how custody is a commoditized thing. Well, look, in traditional finance, this is a bit true. You look across BNY Mellon or State Street, JP Morgan, they offer pretty much the same service. You get to work with different people. But the commodity, it's a commoditized product. You know that custody is not commoditized in the crypto space because you can't even find two custodians that look the same, right? We all have a different technology. We operate in different jurisdictions. We have different coin support, different services on top of it. So because of that, it's not commoditized. However, we are intentionally pushing the business model up the stack. People feel much more comfortable paying fees when they're getting service. So if you're getting service for execution, if you're getting service for lending or things like this, it's kind of no problem. So the wallet layer is already commoditized. If you're out there and you're paying anything for just your wallet tech, come and talk to us. It's basically zero right now. So if you're paying lots for that, you shouldn't be. You probably know there's some competitors in the space that try to sell that pretty heavy. At the custody level, still pretty low basis points of fees. Look, we've got to be able to handle custody for BlackRock. BlackRock charges 25 bips annually for managing the entire ETF. So obviously, a custodian is going to slide in somewhere underneath that for the fees. And then, of course, where we try to make the most benefit for our clients is by providing great service on top of it.
Makes sense. Let's move on to stable coins. I confess I didn't realize Bitco's launching a stable coin. You might have heard there's some other ones out there.
Indeed, it's definitely a trend for 2024 to launch your own stablecoin, and we're no different. But although it sounds the same in that it's a stablecoin, look, there's definitely time for a change. We've seen a couple of different models. The early guys that came in, they offered the stablecoin in a zero interest rate environment, and they manage that and deploy that, and they become quite large. And now they keep, of course, all the interest that they get. There's a second type that's come along where people are like, you know what? Instead of having the issuer keep all that money, we ought to hand it out to retail. Well, in doing so, they've created a security. So, Biddle from BlackRock is a great example here. Hashnote's got one called USYC. I think there's a couple of others. Registered securities, very good products, easily used in the back end for a company like BitGo, but you can't really use it at crypto markets because we're not broker dealers, right? So there's securities. Look, I think there's another model which makes sense. So what creates the value of a stablecoin? Is it the issuer? Is the issuer so great that you want to pay a lot of money for that? No, it's actually the network. It's all of the people that create liquidity on the stablecoin that are creating the value of it. So we think the rewards from the stablecoin should go back to them. So much like BlackRock again, use that example. They charge 25 bips to manage an ETF. Should it cost 500 bips to manage a issuance of a stablecoin? I think there's probably somewhere in between there that's a more appropriate price. We're cutting the price down to 10 bips as our fee off of the stablecoin management. And then we, instead of giving the rewards to the end user and creating a security, which is not an easily deployable product around the globe, instead we have a reward system for the institutions. Institutions that provide liquidity, they can get the rewards. So like almost all of the reward goes out to that part of this like network. Anyway, BitGo, with its position as a custodian, look, we don't compete with all of the people that are providing liquidity. One challenge is we've seen, the the stable coins that are dominant today, they tend to come with a competitive nature against those that they're trying to also have be partners and accrue value onto the network. And that just puts them in a troubled spot. So we think that our position, giving the value back, makes a better stablecoin. One last thing, because I think this is important. Maybe the folks in this room like it. Um, play the future out, right? 5 years from now, stablecoins are going to be a huge mechanism of payments and remittances and all kinds of activity across the financial system. Imagine if it's still a world where all of the value of that US dollar handling accrues to a single issuer party, right? What that means is that if you're trying to build a business, and it could be a remittance or a payment processor, or maybe it's a broker in some localized part of the world, and you can't count on revenue from the dollar side of your business, is a terrible thing. That means you're going to have to charge fees somewhere else. It's going to prevent innovation in our industry. At the same time, there's going to be too much value accruing to a very small number of parties. So we think you really got to level this out. It's going to be completely open. Everybody can participate. It's a good thing.
You didn't pull your punches when I brought up Coinbase. What do you think of Tether?
Look, Tether's stood the test of time. I think they've done a lot of great things. Myself and others have been skeptical at times about, how they would perform over time, but you can't deny they've done a great job, right? So I think they've been promoters of the ecosystem. I think they've also been defenders of the ecosystem kind of between US and non-US markets. So I mean, one of the things that we hear the most at BitGo is reservations about working with US firms. I mean, looking around at the audience here we are at a US based conference. Many of you probably at Token 2049. Compare and contrast, right? Like the industry is having a hard time interfacing with the US. Our clients are having a hard time interfacing with the US. Tether has done a good job bolstering a non US based product. We'll see how that ends for them. I think there's still questions that they've got to improve upon, but they seem dedicated to it. So, anyway, kudos to
Um,
them for having built such a big
yeah,
business.
they're still around. I'll give them that. Let's stick with stablecoins a little more though. This future use case in 5 years, do you see it as a retail play? Because I mean, I think in here anyways, Venmo works pretty well, and there's something analogous in other places. For remittances, sure, that maybe is the play. Or are you thinking is there stablecoin kind of killer use case at the institutional level and like trade finance?
Well, look, it's both. One problem of trying to give the rewards from the stablecoin all the way back to the end user immediately is that you're actually bypassing the people that are making the network work. When you give the rewards to the people that make the network, now you foster competition and openness. So, one exchange that receives rewards might decide to pass the rewards to their users. Another might decide to augment the fees on trading or incentivize some other behavior. But the entire ecosystem can compete. Another ecosystem or provider might say, "Hey, we're going to give it to our non-US users, and we're not going to give it to our US users." So, I think actually this fosters innovation in a very simple way.
Good. And sorry, last stablecoin question. What do you make of PayPal's foray so far?
Look, PayPal, fantastic brand, massive distribution channel. I think to some degree they're hamstrung in the US markets, similarly to what we call with traditional finance, which is, you graduate to a certain size and you're so dependent upon your regulators, and your regulators are so worried about, innovation and things that are coming new, that it's difficult to cross your distribution channel, which is that massive PayPal business, with your new crypto initiatives. And if you can't cross those two things together, then what are you? Well, you're a well-funded startup, is what you are. You've got a good brand, you got a lot of promise, but you're not leveraging your distribution channel to make things grow. So I think they've also learned over the last couple of years that they've offered their stablecoin that liquidity is the thing. Liquidity is king. You got to get liquidity. Liquidity begets liquidity, which means you have to get plumbed through all the exchanges. You got to build it all out. And I think they, like a lot of larger firms, made the mistake of thinking, "Oh, I have the brand, therefore it will work because I am the brand."
Right. Let's go real big picture to end because I've done this for a long time now. And each cycle sort of brought a new story. 2013, 2014, that was Bitcoin goes mainstream, Ethereum rises. Then there was sort of like 2017, ICO mania, crypto everywhere. 2021, NFTs, crazy speculation. This time around, the story has been Wall Street and Washington. And that's fine. It's brought a lot of capital in the space. And we've had to talk way more than I want to about Washington, D.C. And it just feels the stories are getting a bit stale. I miss talking about the new technology and how it might change our lives. So going to the future, give me some narratives or some just big storylines to get me excited about crypto again.
Okay, well, I'll try. Look, I think the regulatory bottleneck gets unlocked reasonably soon. So hopefully your boredom of talking about DC is not long term anymore. But look, I still remain super excited about what's going on in DeFi. That is where you really start to take large swaths of finance, and you put it into smart contracts that operate faithfully and consistently every day of the week. So, Aave, I think, has done a phenomenal job. If you haven't tried Aave, you should try it. It is just incredibly gratifying to be able to take a large loan in the middle of the night on a Saturday evening, and have the terms all be fully disclosed. But it's not going to stop there. So the innovation is out there. It's ready to be deployed. Regulation, obviously, we got to get that right. Takes a little time. You got to be patient with it, but that gets unlocked and DeFi starts to take off.
Yeah, no, that's interesting. I agree with you. DeFi is something. It's just better as a technology, and if something's better, sooner or later it'll catch on. But
If you want to talk about DeFi, I've just been spending time. We do Wrap Bitcoin. People are talking about how do you do proof of reserves and all that. Of course, we've been doing proof of reserves, I don't know, since day one with it. But when you say proof of reserves, there's a lot in there, and actually, you could do more in proof of reserves. There's more detail you could do. So if you look at what's happening with the various risk engines, which are behind, whether you're talking about MakerDAO, whether you're talking about Aave, whether you're talking about Compound, all of these guys are deploying automated on-chain oracles that do risk management from traditional finance, both about liquidity and about how the markets are moving and what would happen if there was a black swan event. So, look, we're primed for a good era. It's probably going to take many more iterations to get it perfect, but there's a lot of mature thinking that's really come into the space, and it's going to make it very strong. So I'm excited about that. Proof of reserves is a part of it. Proof of understanding, like where is the liquidity in the market, so that you can get in and out of positions as needed as the market goes through more rapid change. There's a lot coming.
we've got about a minute and a half. Let's just do kind of a lightning round. Just very short answers, please, Mike. CZ, Binance's founder, has paid his debt to society. He's now a free man. He's got $60 billion. What's he going to do next?
I think he's going to first enjoy his family for a little bit, just like you said. Then he's probably going to go into investment. I don't know.
All right. Who's going to be the bigger market cap in 5 years, Solana or Ethereum?
Ethereum,
Probably. What's the price of Bitcoin going to be at the end of the year?
135K.
Whew. All right. Your favorite person in crypto?
Probably still Vitalik, even though he sings.
Your least favorite person in crypto?
Oh, you don't want to do that.
No, I won't do that. That's not fair to end that way. All right. So what are you most excited about for 2025?
Well, look, we got an election that's coming up. I think there's going to be good news out of the election, particularly if you go one-sided. So try not to do politics. It's not about anything other than crypto. One issue voter here. I hope you guys all are too. Yeah, at the end of 2025, things start really moving.
Yeah, I mean, I disagree. I just think like the lack of regard for the constitutional order on Trump's part, no matter how much he likes crypto, is dangerous. But what I like is what a civil conversation we had backstage. And I think I would look forward to getting back to that too. We can disagree, but we can have a very civil discussion of it. So,
Oh,
yeah, down with now. Anyways, it's a real pleasure talking to Mike. This is one of the real original crypto people. He's done it for 12 years. Or how long you done for?
12 years.
12 years of crypto. Okay. Give him a hand, everyone. Thanks very much for watching our talk.
Thank you, Jeff.
Thanks, Mike.